10% preference share capital is 10 lakh. 12% debenture. Out of 1 crore, 50 lakh means 50% occupied by equity. 1% will be occupied by preference share. 10 lakh is occupied by preference share capital. 20 lakh is occupied by the debenture. Hello my dear students, I am Dr. B.S. Subramaniam, called by name Dr. B.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to have Financial Management 4th semester Unit 3 Session 4 in favor of cost of capital, where we are dealing with weighted average cost of capital. What is that is? Weighted average cost of capital. I already solved one problem in the last session. I am going to solve one more problem of weighted average cost of capital. This is in the existing capital structure. Equity share capital 50 lakh, 10% preference share. It occupies 10% per 10 lakh, 12% debenture. This is their capital structure. The market price of equity share is rupees 70. The company is expected to pay a dividend of rupees 7 per share, which will grow rate 8% forever. Compute the following. Weighted average is based on existing capital structure. The new weighted average cost if the company raises an additional capital of rupees 20 lakh by 15% debenture, which would result in increase in the expected dividend of rupees 8 per share. However, the growth rate remains the same, but the price of the share fall to 60 rupees per share. These are all the important points. Now, we'll go with existing capital structure. WACC for existing capital structure. Source, amount, weights, specific cost, WACC, weighted average cost of capital. So, source, equity share capital, $50 lakh. This goes to equity. 10% preference share capital, preference share capital 10 lakh. 10% preference share capital is 10 lakh. 12% debenture. 12% debenture, 20 lakh. Add 50 plus 10, 60 lakh plus 20, 80 lakh. Total. Out of 80 lakh, 50 lakh is occupied by equity share capital, 10 lakh is occupied by preference share capital, 20 lakh is occupied by the debenture. The total capital is made up of equity, preference and dividend. What's the total capital available? 80 lakh. Out of 80 lakh, 50 lakh is occupied by equity share capital, 10 lakh is occupied by preference share capital, 12% debenture, 20 lakh occupied by debenture. Now we have to give the weights. How to do the weight? 50 lakh divided by 80 lakh, 10 lakh divided by 80 lakh, 20 lakh divided by 80 lakh. First one, 50 lakh, 50, 20, 30 divided by 80, 80, 20, 30, 0.625. We can say 63. 10 lakh, 10, 20, 30 divided by 80 lakh, 80, 203, 0.125. We can say 13.63 plus 0.1376, 20 lakh divided by 80 lakh, 0.25. 24 can take. I have raised 1 point here, I reduce 1 point here. Now, come back to specific cost. Specific cost for equity formula, dividend divided by market price of a share into 100 plus growth rate is equal to, what's the dividend here? The market price of the equity share is 70 and dividend is 7 divided by 70 into 100 plus, which will grow 8%. 7 divided by 70 into 100, 10 plus 8, 18%. 7 tens are 10, 18%. This goes to equity, debt. What's the percentage? 12% I into 1 minus t. What's your I? 12 into 1 minus. What's your tax rate? 30%. 0.30. This is 12. 0.70. 8.4. This is 12 into 0.70. 8.4. Preference share capital is equal to 10%. Specific cost into 18 regarding the preference share capital into 10 into debenture 8.4. Multiply 0.63 into 18, 11.34, 0.13 into 10, 1.3, 0.24 into 8.4. This is 2.02. Add, this is 6. This is 6. 14.66%. This is for existing capital structure for new weighted cost of capital. The new weighted capital raise an additional capital of 20 by issuing 15%, which would result in expected dividend of rupees 8, specific cost, equity, dividend, market price into 100 plus G. Expected dividend is 8 divided by 60 into 100 plus growth rate remains the same. Your growth rate is 8%. 8 divided by 60 into 100, 13.33 plus 8, 21.33%. This goes to equity. Then preference share capital, whatever the percentage is given, same thing you have to do. What is the preference? 10%. Old debt, debt you have done 8.4. New debt, how much you borrowed? New debt, 20 lakh, 15%. 15 into 1 minus 0.30, 15 into 0.70. 15 is 0.15 into 0.70, 10.5. New debt, specific cost, 10.5. Source, amount, weights, specific cost, WACC. Equity share capital, will go equity share capital, it is 50 lakh. Okay. 10% preference share capital, $10 lakh. Then 12% debenture, $20 lakh. 15% debenture, debt, it comes to 20 lakh. Now, the total raise 0, 0, 0, 0, 0, 0, 1 crore. Go with the weights. 50 lakh divided by 1 crore means 50%. 50 divided by 1 followed by 20, 20, 30 is equal to 0.5%. So 10 lakh, 10, 2, 3 divided by 1, 2, 2, 3, 0.1. This is 20 lakh, 20, 2030 divided by 12020. This is 20 divided by 1202030 is equal to 0.2, 0.2. Specific cost into what is specific cost of equity? 21.33. Preference share 10. 12% debenture. Old debenture 8.4. 15% debenture 10.5. Multiply 21.33 into 0.50, 10.665, 0.10 into 10, 1, 0.20 into 8.40, 1.68, 0.20 into 10.5, 2.1. Add. This is 5, 4, so 10.665 plus 1 plus 1.68 plus 2.1, 15.445. This is new weighted average cost of capital. So we have to do the old one, we have to do the new one. Now, out of 1 crore, this is your total. Out of 1 crore, 50 lakh means 50% occupied by equity, 1% will be occupied by preference share, 2% will be occupied by debenture, 0.20, then 0.20 occupied by 15% debenture. This is the new one, this is the existing one. If we add this is existing. Existing, this is new one. So we have to do for existing also, you have to do for new also. You must know that how much occupy equity, how much occupy preference share, how much occupy debenture, new debenture as well. Here only rate changes. They borrow 20 lakh at 12%, they borrow for 20 lakh at 15%. So the rate of interest will change. I into 1 minus t. Regarding the preference share, whatever the percentage is given. Regarding the equity, dividend divided by market price of share into 100 in plus growth. This is the debt I into t. Preference share calculation. New debt 15, 10.5. Dividend divided by market price 110, 21.33. This is 10%, 8484. We have solved 2 problems as per the structure. Also we say whatever the structure is there. One is existing weighted average capital, another one new weighted average cost of capital. Hope you understand. I have gone very slowly and we have to find out what is the weighted average cost. All these things no. We have to find out the weight, total source, divide, each one have to be divided. We'll meet in next session with another problem. Till then, goodbye. Meet in the next session.